Now, looking at the market activity that we are seeing at this stage, the market up for the 15th consecutive day, really posting some positive gains on that front. Could you kindly tell us what is actually happening at this stage?
Well, thanks a lot. I think the market has been driven substantially this week, and as I mentioned last week, that this week probably will be a continuation of last week, and probably what has been driving the market principally this week was the fact that it was what I call a pre-results trading strategy that was quite robust for the better part of this week, especially the first half of the week. And so actually you could actually see it, the benchmark NSE 20 index returned 2% week on week. It's the second consecutive week it's closing on a positive territory. And so we've not seen this for a while. So.
And where are investors putting their money on the market right now on the back of the rally that we are seeing currently?
I think it's purely the banking segment driving the market, driving equities. Because if you look at this week's numbers, I think there was a bit of pre-result trading strategy that was formed around Coop Bank, Equity, and the CFC Stanbic, and we saw that actually there was a bit of profit and gain, profit taking, especially on the second half of the week, that is Thursday and Friday. I think, first of all, I think there was an anticipation of results, and the second thing is that investors, after the results, they were actually trying to figure out the quality level of the results. Did it beat their estimates? Did it come below their estimates, or did it come in line with the estimates? You know, so I think that actually drove the trading in the second half of the week. Investors trying to determine the quality level of those numbers.
You touched on profit taking on some of the banking stocks. We saw Equity Bank falling back by 2.3% in today's session to sit at 19 shillings. That bank was out with results yesterday. It posted a 42% increase in profit before tax. We saw customer deposits grow by 34% in the year to 140 billion shillings. What did you make of those results?
I think by any standard, they were very good results. If you compare them, especially if you look at them on a quarter-on-quarter basis. I think if you look at, specifically if you look at quarter four, I think the quarter four was very strong, and APS returning 19% quarter-on-quarter growth, actually even beating our own in-house projections. You know, even the full-year APS returning about, you know, beating our estimates. You know, so I think investors' view of the results was the fact that this bank actually was quite resilient. In fact, the earning assets grew in excess of 30% year on year. I think that was quite resilient, given the fact that if you look at the environment, specifically macro and financial fundamental environment, they were quite challenging. And I think for a bank to post such kind of numbers on a year-on-year basis, it shows their earnings resilience going forward. And I think, in my view, I think it's still a buy bank. You know, if you look at the key parameters of the bank, specifically things to do with the midline, and specifically I'm talking about the cost of funding and the efficiency levels. I think they were substantially enhanced during the year. And I'm talking about cost of funds going down 50% year on year, quarter on quarter, in the last quarter of the year. And the last quarter of the year was very, very, very bad in terms of interest rates. I think we saw cost of funds topping 30%. And I think if a bank is able to bring down its cost of funds 50% quarter on quarter in a very, very tepid environment, I think it shows that there's some turnaround going on in the place. I think, again, if you look at the cost to income ratio coming down substantially nearly to the management's target, I think there's something substantial being done in the company. I think going forward, I think investors will still be very bullish on the stock.
Now, you're quite bullish on Equity Bank. We had CFC Stanbic out with results this week as well, but that company really failed to give a dividend, with some analysts really saying that this will likely push the stock even lower from the levels that we are at. What is your outlook for the company going forward?
I think, first of all, from a market point of view, we have a lot of value investors in the market who actually are more concerned about the payout ratio. And if the payout ratio is still 0%, I think they will substantially enhance assign discount to the stock. But I think if you look at the micro fundamentals of the bank, I think going forward, they still have some headroom for growth, because one is they just completed a demerger. They just spinned off its insurance unit to another group, and so they're now basically running only two business portfolios, which is the bank and the financial services arm of the group. So I think on an organic level, I think they are quite bullish. And I think if you look at them, there are niche market players specifically to pick. And they're actually very bullish with their niche. Mm-hmm. And if I look at the numbers on continuing operations, they were quite strong. I think the EPS return an 18% year-on-year performance. From an organic level, I think that was within target. And I think going forward, it's a cautious growth for the bank. But I think even in the market, investors will be quite cautious with the stock in terms of assigning a premium to the stock, you know.
Now, George, moving away from the banking sector, if we look at Uchumi supermarkets, it has been on an upward trajectory. This past week, we saw it up 6.2% today in the session to sit at 9 shillings and 45 cents. What kind of results are you expecting from this company?
I think for Uchumi, I'm expecting very stellar performance, especially in the second half of the year. If I looked at their first half numbers, I think the December sales was very strong, and just to take you back, actually the December sales went up in excess of 50% year-on-year compared to December 2010, and it just shows that management is really putting in structures to enhance the turnover, because this is a volume business. And I think in the second half, I'm equally expecting very robust numbers. And in the press, sometimes back, I think specifically the managing director hinted that they might consider paying out a token to investors in terms of dividends. And so you've seen a couple of value investors flocking on that stock. And I think they're still going to assign a substantial premium on the stock going forward until they release the results sometime later this year.
So the NSE 20 up for the 15th consecutive day. What is your outlook for next week? Could we possibly see this bull run continuing into this coming week?
I think the market has factored enough of the results, and the first half of the week and into the second half of next week, I think we expect to see some signs of pullbacks, and we've started seeing this. The second half of the week, we saw pullbacks on KCB, started seeing pullbacks on Equity. I think I saw substantial, some levels of pullbacks on Coop Bank. And so I've seen pullbacks across board. I even saw some pullbacks on Ken or Kobe. And so we are gradually moving away from the market is gradually discounting results. And I think next week, this kind of rally might just reverse, you know, off the back of substantial pullbacks. And I think investors will be pulling back the gains in the market next week.